new video. Um, this is a part two of trading the fractal model. This is a video for people that already watched the first one. So if you haven't watched it, learn the concepts I thought in the first one to then apply here. Because I'm gonna go through this fast. Well, we can recap the last one. Check this out. What you need is so last video we talked about the phases of price and power 3. I will close and open low and close. We talked about the arrays, their value gaps, and order blocks. Okay. So think of this as like your checklist to know for the rest of this video. So if you apply all this, first video, and internalize it by the way you see the chart, you could effectively watch the rest of the video in a different lens. And after you see it in a different lens and you try really hard to connect all the dots and see it the way I see it, you can eventually apply it yourself. And eventually backtest or reverse engineer. At least will engineer. And why to do this? Okay. And once you got all of this mastered, or at least done 50 times on a backtest session with the win rate of at least 35%, you can then invest into a funded account or a live account, depends. I'm gonna fucking write this shit. There you go. Okay. You can then funded account /live. And then once you do this enough of times, you see yourself. So go over this again. You watch the first video. You understand all of this. The phases of price, the power of three, open, high, low, close, repeat arrays for value Fs and blocks, and also time frame alignment. Then you apply that, internalize it, and watch the rest of this video through a different lens as you see it with new eyes. Now I'm no longer teaching how candlesticks work, just teaching the model how, as it is. So I'm going to be running, I'm going to be saying, oh, this is that, this is that. And then eventually we're going to be letting go of your hand. And you're going to be doing this yourself. You're going to apply it and backtest it on replay mode or TradeZilla, anything, backtesting tool. Or you can reverse engineer the model. You can go to the chart, go to an old date, and then see the model playing out. Like you can see the model playing out. So you just see an expansion day, and then you go down the time frames, and then you see where the model played out. You can do either that or backtest it. Go as the chart goes in replay mode. And then once you do that 50 times to 100 times and have at least 35% win rate, you listen to funded account. And or live account. Depends what baller you are. And that's it, bro. If you apply everything and you know everything, you'll be profitable. And then you get that payout and that money. So that's that. We're gonna get to the video now. This is basically gonna be running through examples and shit, and talking in the new lens that you should already have internalized since the previous video. Like I said. So what do we see here? We see a candle 2 closure, but it's bullish, so we're gonna let another candle play out. Well, kind of consolidating. This range broke out. Bodies disrespected this fair value gap. We're trending upwards, but we're leaving all these lows here. So when you're approaching this, you want to see a manipulation of a high, so you can then capitalize off all of this range. So right now we're trying to frame we're not yet bearish, but we're trying to frame a bearish sequence. So we just wait for manipulation of a high. Right now we're consolidated within these candles. Manipulation of a low, we're trending upwards for value gap, and we have a candle 2. Okay, we have a candle 2 and expansion there. So what do? We go down the time frame and then we confirm this candle 2. Now as we confirm it, we have to see if there's a peer as well. Now we have the candle 2. It's confirmed because we have the order here. And see that we have another period resting for value gap. And then what we want to see is a new candle to open and for it to go higher to this for value gap as well. We can use this as well. And go here, form its wick, go down to the time frame, and then trade downwards these lows. So let's let the new candle open. Now we're opening lower, consolidating. Skip this ahead. Creating a range. We see if there's an SMT. And then for value gap, there isn't. So right now we just ranging, so we're just playing this out. Candle open, so we zoom out. See that we don't want to stay in the middle time frame for too long, or you don't want to stay in the time frame for too long. Just want to see what you want to play out. immediately not do this, not range. So it opened here, did that, did it go to the fair value gap down? There's no more participation since it didn't touch a PD right. Actually it did, but yeah, that's something. Oh, we did. Oh, I forgot. You also need to know about correlated assets. Right now we manipulated these lows. We have a bullish candle and we have a target as well. Target candle two. We see that right here. And we have a feeder. So we want an open low on the wick. It's going low. That's the fair value gap. No candle to the end. Candle two. Body still respecting the fair value gap. We go down a time frame. We confirm it. We see that we have a CISD right here. We have protected low right here. And then we're going to want to catch a continuation off of it. So another protected low. We have a fair value gap right here. Candle two. Let's see if we have a CISD. Late again. And we have a CISD. So then we can look to take an entry. Stop right here. Let it sweep maybe. And then target 2R. So we have this tool. Here. There we go. Get 2R. So then what do? You journal this, and then you do it 50 more times. So that's model number one. Let's see if we hit more of these targets. You have projection fib, which you use for targets. Basically, you want to train to the 1, -2, and you want to align it with liquidity. That's all the rest in there. So what do you see here? You see for value gap right here, that's good. This could be used as a target. But let's see what the rest of this candle is. Went to the number one. Also, each one of these has a chance to reverse from because there's a lot of liquidity resting in these areas. See, so price is very likely to reverse there, but to use as a target, it's just called a projected flip. It went to the -1, approaching -2. Let's see if we hit it. It does. Yeah. And then on to our next example, we go back to the daily and we establish a new daily bias. What do we see here? We have a fair value gap. Right now we're just ranging. You want to see manipulation of a high to trade lower or manipulation of the low to trade higher. So let's see how it goes. We're touching this high. The fair value gap, let's see if we have an S&T. We have an S&T and our fair value gap in the correlated assets. So this is trending up. Okay. So what do we see here? We see fair value gap here. Targets above and fair value gap as well. We have a fair value gap here too. So the goal would be to catch a retracement here and then trade up. So let's wait another day. We had the retracement and we went up, but we also manipulated the high, so this is not valid. Now we have more proper sweep, reversal, bullish candle, and the targets are still up. So let's see which chart looks better. As we can see, ES is living all these lows dormant as well as this, and it's lacking the point of interest that Nasdaq has. So what can we do? We can just let another day play out, let a clean day form. Let's see. There you go. Now we both achieved the point of interest. We both reached the point of interest. We established one, and we're forming a candle two closure. So the next step is, like always, confirm the candle two and find a point of interest. Right now, we're lacking a point of interest, but what do we have? We have a range here that we can manipulate to go higher. So we mark the high and the low, and we confirm the candle two, marking the order block, and we have a bearish something here that we just need to stay away from, or perhaps inverse. So we stay here, and we have for manipulation of low. So we respect that. We're also forming a model against us. So we would want a confirmation. There you go. We get the confirmation. So we have a confirmation that we're bullish now, as well as a new point of interest forming. But as we can see, it's disrespecting 50% of EQ. It's not actually. So what we want is another candle to reach into this point of interest and create a candle two closure to then target all these failed swings. So let's see if we get the candle two. Well, candle two, it's the first candle. And we trim down. So we switch our buys. Okay, now we have a conditional candle three and we're trending up. So as we can see, it didn't sweep this. It's not candle two, but the candle three closed above here. So this candle two is valid. And this candle three is valid to trade away from. So we're going to be trading candle four. We see what we have. We have a candle two right here. We confirm it. We have a point of interest that we have reached into. So we're going to confirm candle three as well by seeing if we had a continuation candle. We had another CSD here, another model from here as well as a continuation here. So candle three was tradable if we were more patient in seeing this retracement here. But we're going to be trading candle four, which is the same thing. Confirm the candles prior to that, and then find your point of interest, and you want to clean retracement into it to then trade upwards in this case. So we're going down as we want. We go to the fair value gap, we sweep, and then we go up. We skip the candle by accident, so we have a candle two here. So what do? We confirm it. We have our sweep here and a candle two, and we have a point of interest. So what we want is the retracement down, respecting the bodies of the fair value gap right here. Let's make this more clean. Put that here. We have fair value gap. We're going to reach into this fair value gap, a candle two closure, a valid one, and then a close above this level. So let's see if we have that. Right now we're not, but we can see we have an SMT. We have fair value gap. Moving on, and we don't have interest here, so we can look where this fair value gap can touch. Right now we're just taking eyes. And almost exhausted. So that's a lot for the anticipation. But what we can do is look for another fair value gap to form if the candle allows it. For value gap, but we're inversing it, and we're not doing this. So we manipulated this high, and we're creating a bear sequence. So this is an invalidation. Right now we're in candle two. We switched our bias. So this is a candle two. We wait for this candle to close, and we manipulated these highs, and now we're trending lower. We have a fair value gap right here that we can use as a target. and then we're gonna be trading the open, high, low, close into the fair value gap or these lows. So we confirm the count two. See if we have a fair value gap. Previously we have. Confirm the count two. We have a close above. This is looking kind of ugly. We're ranging, and yep, this high right here, which we are trading towards. What we want to see is a manipulation of this, and it goes there to confirm whatever this movement is. And we don't do that. And we have a bullish. Great. So this is how you avoid problems by having this strict checklist to then catch up on the entries because you always see confirmation. Right now we have a candle two closure. It's looking promising because it has a large wick. We have a candle two closure. We confirm it. We have our point of interest. And we have our range. Right here. So yep. Right here. We have a low right here. Because we're bearish. Okay, we hit. We sweep. It's fine. Just move below here. Just creating a range. We're consolidating. So we're consolidating and we're in a bearish anticipation, bearish bias. Be looking for the highs to be vice versa for the bullish instance. So it's not looking promising. And the candle is being exhausted. Great. So we reach into fair value gap. We have a very large wick. This calls for a new phase of price. So we're looking for the manipulation of a high, which is this, or the low that's here. Manipulate it, don't do anything. Manipulate it again, and now this is looking much cleaner. So now we're leaving all these lows dormant, all these failed reversals, and that's clean targets. It's called low resistance liquidity. We confirm the CSD, count two. We see our point of interest, which we are in. So once you're in the point of interest, you just want to close below or a manipulation on the side because the point of interest reach was in prior to the session. So prior to the candle, we just consider it consolidation. Delete it, trend low. As long as it's respecting the point of interest. So now we're just ranging lower. We should live for value gap, manipulating everything. Creating a new range like the last example. But he's disrespecting this for value gap. This is a lost cause because we're manipulating the lows and we disrespected. We disrespected EQ. What is disrespected? And we should. Right now we reach point of interest manipulator and we have a candle to closure. We can use these as our targets. For CSC, point of interest. We expect the open low, which is the fair value gap. Create a candle two. From the candle two, then have a continuation sequence and enter off of that. So right now we're open high and we just jumped out. Great. We're aiming for value gap. Wait for this candle to close. Consolidation. Wait for consolidation. Right now. Target. Same deal. Play the high. For CSD. And we have point of interest right here. These highs. Right now it's testing the CSD. We have a candle two. These are our targets. to the 5 minute. Doesn't have a CIC, so we wait for a new candle to open. And we disrespect EQ, but we have this. Take a stab at this. And it's going to be ranging upwards and we're creating a model against us. So we can trade into the open, vice versa. Right now we confirm the candle 2. See that we do not have a point of interest. So that probabilities of this playing out seem to be dire since we're doing this on both intermediate and entry time frame. So maybe another plan for us. Right now we reach into the point of interest and we have our CIC. So we're going to take a stab at this. This is a little low probability, but let's see it play out. Here we go into our trade. So establishing new daily buys, played highs. We go here, first close. Ranging. We have a manipulation of the highs as well as a candle 2 closure. We want to trade upwards into a point of interest and trade lower. So we go to that, we confirm the candle 2, same deal. We have an equal low, not valid. Equal high. Now we have a proper candle 2 with a large wick. Confirm it. Have a CIC. Have a point of interest. Have a point of interest. And you want to expect an open high to the point of interest to then trade lower. So open high. You touch the point of interest currently ranging in a consolidation. So we want to reach into this free value gap and now we can do candle 2 closure. Body's still respecting. CIC. We have the candle 2 closure, but we took out all the targets. So what can we do? We can wait for a new confirmation and continuation sequence. Okay, new point of interest to form. Right now, we're not manipulating any lows and we're leaving all these for side. So all we want is reach into this fair value gap and have a candle 2 closure. We inverse it and we trend line. That's why you always anticipate after you hit your targets and after a new phase of price happens, you can always demand more confirmation. That's how you save yourself from bad entries. You always want to trade away from a low that's technical, not out of random just because you have targets. You need to less structure being your side. Right now we manipulate it again. Okay. Experiment with the candle 2. Candle 2. Same deal. Order block. And we have a clean continuation sequence to lower, manipulating the slow, which is not good. But we still have targets. And it's back candle. So when an open high, or reach into a fair value gap, and then trade lower. Right now we do that. But this candle's exhausted, so what do? We want the EQ of this range. Into the 5 minute. See that we're in your work. We have the candle 2, which we confirm. We have it reach into a fair value gap, which we want to reach into this fair value gap. Hit a target. So this is looking more sketch. Reach into the fair value gap. we have this, but for this to be a continuation sequence, it needs to close below here. But if you close there, your stop loss is going to be all the way here. And for you to get 2R, you're going to have to pray it goes all the way down here, which is 300 points. So what do you do in this instance? You obviously wait for the continuation sequence to play out. Wait for the closure. You see all these candles, they're playing out. You don't want to stay out of the structural time frame for too long, because then you can see that what's happening. This is a consolidation. So in a consolidation and a bearish bias, you want to manipulate the highs. So we wait for that to happen. A new candle open. We can use this as a point of interest. We have a protected low right, we have a protected high right here. So we can trade away from this. We just want a manipulation of this to trade it lower. Right now we're creating failure swings. Although we manipulated this, our bias is strong since we have the targets. So to confirm this a bit more, since we're concerning the way we manipulate this, we can step up the time frame and see what's going on. When we have open targets, what we do is use a projection fib and align with that. So use a projection fib, step up the drag this. So what do we see that we have? We have this and a -2, but we already manipulated it. And we have this and a -4. So we could ask for more confirmation and that this point of interest is close to this fair value gap, to this predicted high. We could demand more confirmation by another continuation sequence going to trade the fair value gap following that, because this is concerning since we're manipulating the low and we're manipulating the lows here. We should demand more confirmation. Although we have targets in the 0.4 and the -4 projection fib, we will demand more confirmation. So, like usual, we wait for this to be manipulated since we're bearish. The candles are closing strong. Now we have an open eye. We have a candle 2 in the point of interest, but we're not trusting it. We're demanding more confirmation, so we want to close below here. You see, that's why you demand more confirmation, and the candle closes. Right now, we see if we have a sync T, which we do not. Great. So we should wait for the close below this range, below or above. We have a candle 2 closure. Confirm it. We have a point of interest. We're reaching into it, still haven't tapped into it. Wait for the new candle to open. Open high, great. Tap into the fair value gap. Manipulate these highs. Create a bearish candle. Large wick. Step down the time frame. But we do not have confirmation that that candle 2 is valid. So we let this play out. Right now, tap into a new point of interest, and we have a candle 2. So we participate and we see confirm that. So we manipulate these highs. Now this is confirmed. Closure there. closure here. New candle's opening. And we don't have the closure here, so this is not valid. So we step out of time frame and we view this as a consolidation to then either the high or low. In this case, it's the high since we're bearish. We've been bearish an awful lot. This is a consolidation. We manipulate the consolidation and then we go low. Great. Although we couldn't confirm the candle following that since it took out our targets and reached into a bullish B array, we could view this as another consolidation. But this is exhausted and the new candle, what the hell? And this is exhausted and the new candle is open, bullish. So we switch out our bias and wait for that candle since we always want to trade the candle. We have a candle 2 on the bullish on the bias time frame on the daily. We confirm the CISD and now we're getting a bullish attack. Right now we have the CISD and we have our points of interest. Like usual, we expect the manipulation of the high or the low. So we want a candle 2 here. The candle open. We see if we have a SMT. We're building an SMT at the highs, which is not great. And we don't. So there goes the green. What do we have? Bias line. We see that the body has disrespected the fair value gap, but this still has a chance to close bullish. So this one manipulation here as this candle closes. And it closed bearish. The new candle does the same, disrespects it and breaks it. So we're seeing this as a consolidation and we want a manipulation of the higher low. And we break downwards. So we have our new range. And we wait for manipulation or reach into this fair value gap. We reach the fair value gap. We see what phase of price plays out here. You see that as we're in this fair value gap and reaching towards it, we have this here. So what can you do? We see that this candle is closed rather strongly since it hasn't touched these highs and has respected this fair value gap. But that is supported by nothing since this hasn't manipulated anything. This has this low thing dormant here. So as seeing this as low resistance liquidity, although this is a valid candle too, what move would be more worth it to trade off of these highs or off of this low? Off of these highs to target this, as these lows aren't supported by sweep. So this is less profitability than this. So we're gonna go with option 2. We're gonna trade the open high low close of the following candle. So we wait for manipulation of this. There we get a conditional candle 2, but we take a target. So we let another candle play out. The other candle plays out, manipulates this, creates a bullish candle 4, manipulates this high. Now, what do we do? Now that thing we've been anticipating has been playing out, and there's a manipulation of the low, which isn't a confluence, it's rather a thing to be worried about. You still want to trade this lower. Since this low is closer, is more far, is closer to here than this high is to the opposite. We still trying to get down since we have the model playing out and this side. So we have an order block, and we have a point of interest. And we have a candle too, which is great, but it's still in the candle. It's still in daily candle too, so we just want manipulation in the following candle. Right now we retest the order block, disrespected disrespected the EQ of this wick. Not yet. We have a candle too, great. Our targets are open. Now we go down and confirm the candle two again, and we see that we have an order block, and we do not have a point of interest, and we have this fight. So for that, I could be touched. Okay, create a new candle. Don't want to stay on that time. We inverse it. Consolidation range. Check for SMT. We have an SMT. We added an SMT right here. We missed it. We have a candle 2 and an SMT. So we go down a time frame. We have an SMT. We have an order block. But we have no point of interest. You know, this is a point of interest, but that's really close to our swing. We tap into still no tap into the point of interest. Let's see if we have an SMT. We do not have an SMT. So this is not a valid continuation. This is going to play out. There you go. People would get stopped out there because they're penetrating the model. They think that this is valid, but we haven't gone through the right phases. So what do? We step down the time frame and then we think twice about what the fuck is going on. We see that although we open high and we started manipulating highs, we lack the point of interest on the 5 minute, and we have low resistance liquidity on the protected swing of the candle 2 of the hourly that we're trying to trade off. Now that SMT is a strong confluence to have on your side, it won't always play out if you don't have all the pieces of the puzzle on your side. So you have to be ready on what's on your side and what is. So again, what was on your side? We had an SMT and we had a protected swing. Okay. We had an SMT. We had a protected swing. Right? But we had this low, this high, close to our point to our protected swing that we're trying to trade away from. Now, people would think that this is a CIZ, this is a continuation entry, but it isn't. We haven't tapped into any fair value yet. We've inversed this one, and we had these highs too close to each other. So people would enter here thinking that this is protected, but it's not. So what happens? They take an entry, and then they get stopped out just because they weren't aware of the things that were against them. So you don't want to pattern trade this. You want to go through this step by step and be wary of everything that's going on. You have an answer to everything. In trading, nothing happens for no reason. There's always a reason, and you want to be attentive to what's happening. Thankfully, the model has an answer to everything. So you're not aware of nothing. So you're not aware of random things. Because everything I've explained here is played out according to the model. Even if I didn't take an entry. Because that's how price works. So use the phases to analyze and to take entries and So that's those are some examples. We're gonna do one more. Hopefully, we can get a bearish example going on, but it's the same thing. Just a candle two, the candle two swing, confirm the candle two, point of interest, candle two in the point of interest, confirm the candle two in the 5 minute, see a point of interest in the 5 minute, tap into the point of interest in the 5 minute, let a propulsion block to happen, continuation sequence, and enter off of that, and that's it. So let's get a continuation on the bullish aspect of things. Then one played out. We had a candle 4 here, but I want to show a candle 3 example. I was on trade candle 4. Now we have bearish examples. Right here is a great bearish example. I could put room for example as well. So what do we have here? We have these lows rather close to each other. We have a confirmed candle 2 right here. We have a point of interest. But we have we have an opposing run on the same candle. So which side would you want to be on? This little wick or this one? That's a pretty difficult question. So what do? Get more confirmation. So you want to tap into this and a closure below. You gotta tap into that. Candle 2. See, people would enter out of this, not gained anything because you had an opposing run. So you demand more confirmation. Simple as that. Right now we're testing the order block and we are reaching these highs, so we can tend to this, which is more ideal than seeking another confirmation. Why? Because you're entering off of manipulation of the consolidation. So right now we're reaching the consolidation high, and our bodies respected and broke out. And we're trending up, and we broke this. So what do? We let this candle close. Right now we have a candle 2 closure, but the candle hasn't closed. So we let it close. Okay, we have a new candle. Manipulate this high again, and manipulate this low. This is quite tricky, but we could frame this. Right? Manipulated this, so we want to reach into a fair value gap and a confirmation that we're still bearish. So right now we're consolidated. This is not a CISD. Didn't reach into anything valuable. Didn't reach into anything we can pivot off of. Right here, we check if we have an SMT and a fair value gap. We do not. And we're creating a model against us, and we have an opposite run, and we manipulated this. So I am seeing this as one big consolidation. Nothing we can pivot off of. Now, hopefully, for the sake of finding a bullish example, you would get a manipulation of the low to then trade it up. So let's see if that plays out. No, we go higher. Right now, we're in this range. We're in this range. In this range. Create a fair value gap. Still ranging. Still ranging. And we have a candle 2, and we reach into a fair value gap. Right now, we're overall bullish, but we have all these lows dormant. But we've reached into a fair value gap. So with this being overall bullish, you would want a swing on the bullish side. And as we have a candle 2 closure right here, we would manipulate this range, which is also a consolidation. So we manipulate this range and then we trade up. So that's what we're gonna frame. Right now, we're still consolidating. We're not touching any highs or lows. We touch these lows, still respecting the fair value gaps, disrespected this one, right? And we have a bullish closure. So with that, we drop to the time frame, structural one. We drop to the 1 hour. We confirm the candle 2, which is here. And what do we see? We do not have it. So we give up on that candle. And we trend down. That's why you need the confirmation. Right now, you have a conditional candle 3, so we're going to be trading candle 4. You confirm the candle 3 and the candle 1. There you go. You have the swing. You have no other lows that are dormant because we manipulated this and we tapped into this fair value gap. We confirm this. We also confirm this. And we see our point of interest, which is this. And we just want an open low and a manipulation of the low in the fair value gap. Right now, we check for S&T. Yes, it's looking a bit better. We have a bullish closure inside of this, and we have manipulated the highs. Although here on Nasdaq we have, so we just want a proper swing, so we let more candles play out. Right here we inverse this, but we still have a point of interest right here. Do not trust this swing since the body's disrespected the point of interest. Right here we inverse another one, but we have point of interest right here. Our bias is still intact. We reached the point of interest, okay. We reached the point of interest and we had a candle 2 closure. We had a candle 2 closure, we confirm it. In New York. And we do not have the candle 2. So we can do one of two things. We can force the candle 2 and catch the continuation off of that, but that's lesser probability, so we're still going to do that. So candle 2, leaving all these lows right here, consolidation, manipulate the lows, we get a candle 2 right here. So we catch the continuation off of this, since this is technically the continuation sequence of this. But we're not going to penetrate this because this is this. We had the first proper manipulation happen this one, so this is technically this. So we're going to catch the continuation after that. So right now we have a new point of interest form, and people got stepped out because of that. Otherwise. So we don't want to stay on this for too long. Scope out, see that we're trading lower, and we have consolidation happening. We want a manipulation of the low since we're bullish, and we do not. So let's see if we have an S&T. We do actually. We do have an S&T, so we're going to play this back. We did have it over here. We have the S&T. Up on the 5-minute. Another real move is happening. But what do we see? There's no candle 2. There's no CISD. So what do? Same thing. We force it, just like the last example. I mean, same example technically, but force it. We have the CISD, and then we want to trade off of this. So, or we can go to the 15-minute and catch a 15-minute swing. So right here, we have this. I mean, we have the this. Wait for a new continuation to form. And we trade upwards. Okay. The technically the entry was here. Shouldn't have went to the 15-minute. This one's because we're impatient for swing. That was the entry. You can see we play this back as if we still stayed on the finder. Shouldn't have left there 15 minutes. So what do we see? We forced the candle 2. It happened right here. And then we want a continuation off of it. So we wait for the point of interest. Right now we're taking targets. So this likely wouldn't have been an entry. We do that. And we get another CSD. So with that CSD, continuation off of this, supported by this, and this, and this, and this. Take them all. Or stop here, or at the body, targeting 2R. Then we let it play out. And yeah. So that's everything. Hopefully you guys have a better, hopefully you guys understood what I was talking about compared to last video. Since you should have. Like I said, you need to know SMT, R3, 1, 2, 3. Liquidity. This is the price. We get our consolidations. Swing points, which also connects R3. Liquidity, which also connects to this. Something liquidity. You should know what fair value gaps are. Points of interest, POIs. Points of interest. Points of interest. Highs and lows. It's connected to that. It's connected. This is connected to this. Value gaps. CSD which is connected to points of interest. Last video. We'll get to this. And all of this will lead to proper understanding of the model and the ability to test yourself. Your understanding while trading on demo for backtesting. yeah, that's how I see it for you guys. Um, so watch this video over and over. I think I explained them in most of its aspects pretty well. Hopefully, you guys learned and saw this video in a different lens. And yeah, that's it. Let me just tie these together. So you analyze liquidity and look for power three, right? You look for candle two with perhaps an SMT. And then you analyze the liquidity inside of it. And then you understand the swing points. You analyze the points of interest. You see the highs and lows. And depending of the highs and lows, you'll see if there's a consolidation and is anything that you want traded into before going and trading to the direction you want. So you would want to trade towards something, but before that happens, you need something to be traded into before trading to there. So that's the consolidation. And if you're in a consolidation, you want a high or a low being manipulated before you go to your targets. So those are the stuff that you need traded into before that. So every time you go to intermediate time frame or any structural time frame, that would be the hourly or the 5 minute. You would see if there's a consolidation, you see the highs and lows, you see the swing points, you see everything. You identify your protected swings, what you want not traded into, and what you want traded into in order for you to trade into what you want. So the consolidation can be used as a point of interest as well as a fair value gap. They both are in the same since the fair value gap is a consolidation in the lower time frame, and a consolidation is consolidation in the time frame you're in. Um, you just want a manipulation within the area, and yeah. So you get out the consolidation trade into your points. Use points to your advantage. Points of interest applies to this, and this. Highs and lows applies to this. Highs and lows applies to liquidity. Highs and lows applies to point of interest. This all applies to one and the same, to be honest. But yeah, hopefully you understand the model now. And more of this you can do yourself since you understood it. So you apply all this, you internalize it, you watch the video over and over, you go through the examples, and then you see how I flow through the charts. And then you have to see it in a way that you can also answer to the questions that the chart is proposing us. Since this is all a puzzle that needs to be solved. So you see the swing points, you see what's protected, what's not, you see the points of interest, you see what needs to be manipulated into before trading upwards. Okay. Okay. This consolidation. You see what needs to be manipulated before trading upwards. Ah, great. Oh, let's do this. Okay. Like I said, you also have to see what needs to be traded into for you to trade to your targets. Trade to your targets. What needs to be traded into for you to go to your targets. Your points of interest for value gaps, the consolidation highs and lows, points of interest. Highs and lows, just general structure, but that's simplified here. Highs and lows. highs and lows, what needs to be traded into. Go the direction you want. And like I said, you see everything that way. Internalize it and do it yourself. Back test for a few hours and watch the videos. Watch the videos on internet. This is all online. And yeah, that's part two of the video. And hopefully you guys liked it. And I'll be live streaming tomorrow since you can see here. I'll show you guys. Since we're forming a candle too. On the date. It's for about you're gonna be catching this move up tomorrow. Okay. So stay tuned for the live stream. Let's see the points of interest that we have right now. We have our CISD. We have a point of interest that we reached into. So this is protected as well. This is protected. This is protected. We have a CISD here as well. So there's no lows that need to be traded into on this aspect of the chart. Now we took out targets. So within this candle or the next one, we need to trade into this and a confirmation. To then trade the fair value gap, candle two, and then trade up. So that's the move for tomorrow. Hopefully this plays out. And yeah, that's it for the video. Hopefully you guys enjoyed, and that's it. Thank you guys for watching, and goodbye.